Hi everyone, this is Raphael, CEO and founder of Zenok Labs. Today I'm going to go through our playbook for finding product market fit with you. I don't think there is much of a need to explain why this matters. Product market fit is just critical for your startup, and quite transparently, 9 out of 10 startups struggle with this specific thing. Even if you're not a startup, if you've developed a new brand or a new product within an existing organization, this is critical. And in fact, if you're a service provider, it's the same thing, right? You could call the services market fit. It's just it's the primary challenge that everyone in our space that is developing something new is struggling with. And I can't tell you the number of times I've tried to help startups. And based on that experience, I've put together this playbook, which summarizes my thoughts on it. If you're expecting a 5-minute video that is going to give you a quick fix here, skip on, move on. This is not it. This is going to be a deep dive. It's a quite dense document. I will try to keep it high level and upload the full document to my website, but it is still pretty intense, which is a function of how important this topic is. I think it deserves a full video. Now, having said that, let me introduce myself really quick here and then dive right into it. As mentioned, founder and CEO of Zenok Labs, we help businesses of different sizes grow faster. That's really our mission here, help you grow faster. Before, I was a principal at a company called Roivant. We were a principal investor, so raised capital for our own balance sheet. We raised $3 billion from SoftBank, Founders Fund, and many other strategic and financial investors until we went public on the NASDAQ in September 21, which is when I moved on. Part of being a principal investor means you're investing in startups. Part of it means you're building them greenfield. As a principal, I've done both. And so got quite a couple of reps under my belt in terms of building and scaling businesses. Before that, I started 2 successful startups, one in e-commerce, the other one in digital health. So that's what qualifies me to talk about this topic. It's near and dear to my heart. Without further ado, let's dive into it. We're going to start with a definition. We're going to start with metrics. Then we will look at how it feels when you don't have product market fit, how you can get there, and what some common root causes as well as best practices are. Let's continue. The first slide here is on how you define product market fit. So let's stay on a conceptual level. I think the best way to describe it without overcomplicating it is the way Mark from A16Z described it, and Andreessen Horowitz. It's, product market fit means being in a good market with a product that can satisfy that market. You want to be in a good market with a product that can satisfy that market. Sometimes fixing product market fit is about taking your product into a different market, whether that's a completely new one or a new segment within your existing market. Just a quick idea here right up front. Now, I mentioned this in the beginning, but why is this important? Well, it matters because without product market fit, your business is not going to go anywhere. And ultimately, don't be misled. What does not mean having product market fit is closing a deal after month and month of negotiation, uphill fighting, and magically relying on one of your top sales reps, or maybe even you as the founder or executive, to somehow get it across the finish line, involving a lot of consulting services and also your product. That's not product market fit. Product market fit means that people are pulling product out of your business at almost or actually a higher rate than you can deliver it. That's what product market fit feels and is like. So let's continue on the track here on slide 2 in terms of what it's not. What does it feel like if you don't have product market fit? And I'm going to look at 4 primary phases here. The first one is in the acquisition phase, as you're trying to bring on a new customer. The second one is in the engagement phase, as you're trying to activate them for your product and keep them. That's the third one. It's retention, and then from there it's referral. This is the steps here are in reference to what's called the pivot framework or the R framework. AARRR framework. I have a separate video on that on my YouTube channel where I run you through that framework. I'm using slightly different language here, but fundamentally it's the same thing. I'm not going to dive into every minute detail that I have on my slides. Do reference the full playbook on my website if you do want that. But I'm going to pick a couple of things here for just for highlighting it and making it feel more real. What it does feel like if you don't have product market fit. Quite frankly, you probably know what it feels like. On the marketing side, in acquisition, quite frankly, if you don't have product market fit, you don't know which channels to use. You're spending an absurd amount of money for very little to show to. Just generating leads is not really what we're looking for. We're looking to ultimately drive pipeline and revenue through marketing. And if you're not able to do that, that's not what product market fit ultimately looks like. In sales, it's the same team. If your sales team is complaining about long sales cycles, low lead to close ratios, that all is indicative of you either being in a macroeconomic downturn or in an enterprise environment or not having a product market fit. And third one, I also find that really interesting here. This third bullet is on consultative selling. If your marketing and sales team is not, and to some degree also your customer, probably very much also your customer success team, is not able to consult your target customers on what their strategy should be in the space that you are operating in, then you don't have product market fit because you don't know what you're doing. You don't understand your customers. That is your primary responsibility. You got to start understanding them in order to become more than just sales rep, but become consultants to some degree. One good way of doing this, for instance, I've seen in enterprise sales, is to hire someone from the industry that you're selling into and making them your head of customer success. So that's stuff that you would experience across acquisition. Let's skip engagement. You can read through that. Retention, another good one here is customer lifetime value. That's too low, especially relative to customer acquisition cost, which leads to a ratio of customer lifetime value to customer acquisition cost below 3. Let's say you are making 9K in revenue of a customer and it costs you 8 to acquire that customer. Maybe we want to be fair and also say to acquire and retain that customer over their lifetime. That's not good. That's not good, and VCs will spot that. Any kind of investor will spot that pretty quickly, and the management team will too. So that's an example. Another example could be, customers not really missing your product if it were to stop existing. There is a test called Sean Ellis test. Have a look at that too. It will be linked in this document, but you should have an easy time finding that on Google. These are all things, fundamentally, again, it's going to be in your gut feeling that you don't have product market fit. If you're all looking for some pointers on what it feels like, here you have them. Now, let's look at a couple of metrics from, A16Z. Andrew Chen published a post on this, on how you can try to track whether you have product market fit. Again, I'm not going to go into all of the points on here. 1, because they're technically relatively complicated. 2, because there are a lot of them. And 3, you can find good information on this online as well. Let me highlight a couple of them. Revenue growth above 20 to 30% month over month. If you grow at this rate, it's just this coming back to the definition of product market fit. It's the market pulling out more product than you can deliver. This is what it's going to feel like, right? You'll have a crazy growth rate. Retention rates at day 1, 7, and 30 that exceed 60, 30, and 15%. That just means that you have a relatively high retention rate over a couple of days, or in this case, month. Retention is always a major challenge, especially in B2C businesses. So if you are able to demonstrate above, for instance, 15% retention rate of a cohort that signed up 30 days ago, indicative of product market fit. Last one, well, maybe not the last one, but one additional one that I want to highlight here is cohort retention curves that flatten. It's a different way of looking at this one up here. If, let's say, you're looking at Google Analytics or some kind of other analytics tool that you're using, and you're seeing like a retention curve that goes like this and then stabilizes at some level, whatever that level is, as long as it's not 0%, it means that there is a committed user base. You have power users that are understanding the product, engaging with it, and sort of coming back to that tool. This one is interesting. User revenue and activity expanding over time. This is a common metric that investors will look for. I think it's called net revenue retention, where you look at how much revenue are you retaining, how many customers are you retaining, but is there any account expansion? So are you upselling, cross-selling customers? Are they through product-led growth? Are they adopting additional tools? For instance, in HubSpot, you have the sales CRM, you have the marketing CRM, you have the operations CRM, you have the customer success CRM. You start usually with the CRM for sales, but maybe over time you morph into also using the marketing CRM. That is great, right? That is account expansion with you having to do anything. So that would also be a very strong signal of product market fit. Now, keynote down here, you don't need all 10 metrics to be having product market fit, and consider that you be considered that you have product market fit and be exciting for top tier VCs. Having one of them would be great. I mean, if you had 20 to 30% month over month revenue growth, you really don't need that much more. Right? That's fantastic. So here are a couple of metrics that would help you understand whether you have product market fit, in addition to what we looked at on the previous slide, where we spoke about what it feels like rather than what you see in quantitative metrics. Okay, so another dense slide here that I'll try to keep high level. But if you are trying to get to product market fit, how can you do that? Recommend that you also check out a separate video that I'll be publishing where I talk about what I call the blueprint for how to build a startup from scratch and scale it too. This is essentially very similar to what I say here. I think there are fundamentally 4 steps involved here. Step 1 is building or defining your version 0 of what it is that you are. Step 2 is building a minimum viable product and infrastructure for you to test that version 0. And then 3 is running quick and cheap experiments to test whether your version 0 sticks, or to some degree has product market fit, though there will be a ceiling to how much you can experiment and understand early on. You'll have to live with leading indicators. And then step 4, look back at step number 1, most likely loop back to it and continue iterating on your version 0 until you're at version whatever. That means where you will have product market fit. So what is part of some of this stuff? Well, your version 0 probably includes a definition of your vision, the customer that you're targeting and what their needs are, the product, i.e. how you're proposing to solve the customer need, monetization, how you will make money, your go-to-market strategy about where you will reach your audience, where they're paying, the sources of information that they're paying attention to, where they're spending their time, and how you can reach them on these channels and tactics, and how you can do that efficiently. That's the go-to-market strategy and infrastructure, also kind of covered in step 2 to some degree, but what needs to be in place to get started. Step number 2 is about implementing that infrastructure and the MVP. The key here for me, and it's really, really important, be as minimum as you can be so that you can get started selling ASAP. Building fancy products, building nice mock-ups doesn't matter unless you have clear validation that people want this. And the ultimate form of validation, the best form of validation, is payment. There are other forms of validation too, like having people sign up for a waiting list, or getting to some kind of letters of intent or pilot studies. Whatever it is, all of those are good. Payment is the ultimate form of success, and that's what you're looking for. Step number 3 is about about the quick and cheap experiments. This is about making a long list of ideas of how you can reach your audience, which is part of the go-to-market strategy to some degree too, and then executing that ASAP. Sometimes the channel determines whether your product, whether the offer that you have developed is successful. For instance, if you are in e-commerce, you're most likely either going to sell through Amazon or through Google ads, shopping ads. You may also have some success through paid social. That may be more expensive and less efficient than the other 2 mechanisms. So if you're an e-com company that is not using these 2 tactics, you're probably shooting yourself in the foot. If you are a freelancer, you can try a lot of things, but ultimately you want to be on a platform like Upwork or Fiverr in order to commercialize. So to some degree, these cheap and quick experiments are not just for learning about your customer and testing your offer, but also finding channel product fit or product channel fit, because channels are to some degree markets. Right. And then from there, step number 4 is again really going back to square one, redefining what it is that you are, and cycling through that loop of experimentation as fast as possible. And that's really what product market fit and finding product market fit feels like. Stay flexible in the beginning. Try to avoid too much investment in things that ultimately were to be sunk cost if you were to pivot, and get mentally overly bought into what it is that you're doing, because you will have to change. Wow, this is another dense slide here, but let me break this down for you. Essentially here you have a list of a couple of ideas of what common root causes are for the lack of product market fit. Left you have product, right you have channel/market. I'm going to again highlight selective things here, but let's just get started, and then you can read through the rest on your own. But within vision, for instance, what you're seeing is that a common challenge is that this is typical for B2B SaaS businesses, that the problem that you're solving is unfortunately not a top 3 to 5 burning need of your customer. And if it's not something that keeps them up at night, you're just going to have a hard time. And whenever your customer has a hard time, they'll try to cut your technology out of their tech stack as fast as possible because it's non-core. That's why you see so much massive value in CRMs and core operating businesses, even though the sale is a little harder. You want to make sure to understand your customer and build something that is a top priority for them. Second one, another interesting one. Sometimes, especially if you're a CTO, you may have so great ideas and so novel ideas that your audience isn't even aware that they're having the problem that you're solving. It's to some degree a common phase in marketing, where you say we want to create demand for a niche that didn't have that demand before, which involves a lot of education, content, and persistence and perseverance. You can answer for yourself whether you have that energy and the resources to keep going long enough. If you are a fledgling business, I think on average my recommendation would be to build for a need that already exists and avoid the education part. You can make it work, it can work, but it takes time, it's painful, it may ultimately not work. Okay, here is another one that's interesting. Someone else would benefit from your product more than your current customer. This is, I think I referenced this earlier in the video where I was saying something along the lines of you may be in the wrong market with a viable product. And that's why product and market fit has two, three words, but really the two things that matter are product and market. You may need to change the market that you're in. And I have another separate video on this on my channel where I walk you through the Ansoff matrix. He is a mathematician that has developed a pretty simple framework for how to think about positioning. He says you can either penetrate, if you want to grow, you can either penetrate your current market with your existing product. You can deploy a new product in your current market. You can take your existing product to a new market, or you can innovate and do both a new product and a new market. Which is the ultimate form of risk taking to some degree, because you don't understand the new market. You are deploying a new product. As a matter of fact, it's the situation that many startups find themselves in, right? I mean, we're all kind of going into a new market with a new product. And so what I, for myself, also as my own business found helpful is to think about, hey, if I struggle selling my product to SMEs, is there a way for me to move up market, to move enterprise or corporate? And they may appreciate more what I do, right? If you, for instance, have a rare collector card, if you're trying to sell that to the average consumer, they are not going to care. As a matter of fact, they may think that you're a weird guy or girl that has this trading card. But if you go to trading card enthusiasts, if you find the people that are into the specific cards that you are interested in, they're probably going to rip the thing out of your hand and pay you a lot of money for it. So that's one example for customer. Let's take another example for product here. Product has high switching cost, meaning that customers must spend significant resources to get started, while the value of the product may not be proven yet. This is a scenario that I had at one of the companies that I was involved with back at Roivant. We were an enterprise SaaS business in the healthcare space. Specifically, we were developing a core operating technology for healthcare, for pharma businesses and biotech businesses to run clinical trials. You can think of it as a risk management application for clinical trial management. And we were a new business, so we had some validation, but not a ton of it. And we were talking to large enterprises, which on average are running clinical trials, like the Pfizers, GSKs, Novartis, Roche of this world. And we were talking to deep specialists in clinical trial management who have done this for 20 to 30 years. We are small SDRs, have no idea what we're talking about. The product is unvalidated. We may have cool new ideas, but why would they believe us, right? So what that led to is we had sales cycles between 12 to 24 months. And many of the deals at the end of the 24 months weren't going anywhere, which really is a matter of this is risky, it's unvalidated, and we'll have to change all kinds of processes internally in addition to the risk on the regulatory level, right? And that's just going to mean you may want to think about how you can de-risk that a little bit and make it a little easier for your customer to adopt. Right, here is another one, monetization. The price is so high that your current customer segment cannot afford it. This is totally transparent. This is one example that I struggle with, where I'm trying to find the right product to offer to startups. I love building startups. I love helping startups getting off the ground and scale to millions in revenue. But, you know, as a function of being a startup, you typically don't have a ton of money as you get started. So I either personally have to reduce my price or move up market, which is something I was talking about earlier. Someone else would benefit more. And the benefit is a function in this case of being able to pay for the value that you're delivering to some degree too. You're just going to make your life a little easier. All right, let's move over to channel/market. Examples of root causes over here. Let's start with go-to-market. Here, this one is interesting. The channel you choose is purely informational. I'm personally an expert in paid social. Paid social is great to raise awareness for a product and business, for instance, by boosting content that has performed well organically. What LinkedIn or paid social is, LinkedIn is one example of paid social, of course, for B2B, but it could be Meta, i.e. Facebook and Instagram, or Twitter for other campaigns, are typically less good at is having people go to a landing page and have them convert right on a landing page. That on average is not going to work too well. So you want to think about, hey, where can I find qualified leads, whether that's consumers or customers, and where do they go when they have intent? That's why for an e-com business, being on Amazon is so important. That's why for a B2B business, especially enterprise, it is critical to be at trade shows. That's where most of deal making is happening. And if you're not at trade shows, at specialist, expensive trade shows, you're missing out on a lot of the action. All right, so that's on go-to-market. Then infrastructure. Here, this is a super interesting one too. Your ad copy is not managing expectations well enough. If you are someone that is in an integrated growth team that combines marketing and sales, or if you're a founder, you'll see this. It is so easy to get people to click on an ad by promising them crazy things that are never going to work out. But the moment you as a sales rep then jump on a call and try to close that lead, it's impossible because their expectations are completely off the charts, or you have used wrong language, they're thinking about something different. So it really finding the right leads and managing their expectations early is important. Another example, I was supporting a fintech, a B2B SaaS fintech, where we were developing sort of an application where you could integrate all of your financial tools and accountings and bank accounts and get an overview over your financial performance. And we were trying to pitch them on, hey, if you talk to us, we may, and onboard onto our platform, we see how well you're performing and we may ultimately invest in your business as a function of it. Well, all of the people that we've reached out to with that message came to us expecting that we would invest. And then on a sales call, you're like, what? Wait a minute. You got to buy the platform first. This is just impossible to convert anyone like that, right? So classic mistake on the channel side. All right, here are some root causes. Again, I'm already 23 minutes at this point into the video, so I'm not going to go through the rest. There is a little bit more of content to come here. And let's wrap it up with best practices, right? So, and I'm kind of cutting off with my video stream here a few of these points, but I'll just summarize them for you. The first one is, and I guess best practices is not necessarily the right language here, but just a long list of things to consider as you're looking for product market fit. And the first one is obvious. It's hard. Face it, it's just hard. I mean, if you ever get suicidal, definitely get help. But you'll wake up some days and think, dude, like it wouldn't hurt me too much if I weren't to wake up tomorrow. Like the pain is real. Right? It's really hard. Second one, you must move as fast as possible. That's why, and when we think about backup to that loop that I was describing, define your V0, your version 0, build an MVP, and then test it. It's important to move through that as fast as possible, to be really lean in both the marketing and product assets that you're developing in order to commercialize what you're thinking about. Because if you're too deep bought into what you're doing, you won't be able to iterate fast enough. Third one, avoid overcommitting. Set yourself deadlines. This is one of the primary challenges that we were always facing back at Roivant, where we were thinking about, okay, is this now validated? Have we falsified the idea? Should we move on? At some point we said 6 months, 1 million in budget. If it works, great. If it doesn't, scratch it. Fourth bullet, product market fit is not a goal, it's a process. what this ultimately means is that even if you see the signs of product market fit at the scale that you're at, likely once you transition over to the next level of scale in terms of revenue and adoption, you're going to run into challenges again. Certainly as you go from the lower end of the market to the higher end of the market, it could feel and be completely different than what you made work in the beginning. I, in my own business, am having this issue where I made it work on one platform in one market, but it's hard to move up market, or it's hard to scale beyond a certain level of revenue. Next one, version 0 is never going to be perfect. Spit it out, test it, refine it. Definitely don't build a pitch deck, a long business plan as you get started. That's useless. You're going to waste your time. Put a couple of bullet points on a piece of paper. Think a little bit more about your sales script and then get off to the race. Don't forget product channel fit. I mentioned this throughout this video, where channels are markets, and sometimes your success is a function of being on the right channel. For instance, at the digital health startup that I built some time ago, what we experienced is when we advertised on Google, nothing was happening for us. Once we switched to paid ads on Instagram, consumers loved what we were doing because we found the right audience on the right market, which was a channel. This one here, figuring out how to reach your ICP, your ideal customer, is important, especially for technical founders, where I see them many times developing something sort of in the garage or in the basement and not showing it to anyone, being shy about it or overly protective of their idea. You have to figure out how to reach your audience. And if it feels challenging in the beginning, it doesn't matter. You're the founder. You got to make it work. Unless you have a business person on your team. That's why it's recommended to have both a CTO and a business leader, or a CPO and a business leader. Look for power users in your among your early adopters and double down on those. Get on the phone with them, understand their needs, their pains, what they think about your product. Use them as evangelists. Find metrics that would indicate that someone is a power user. It could be, usage based. It could be retention based. Probably it's always going to be usage based, to be honest, in some way, shape, or form. Next one, don't build a product people ask for. When you interview someone, build the thing that you think would be best to solve the things that you're talking about. Right? People are terrible at explaining what they want. And if you were to ask someone, they would come up with 100 features, 99 of which really don't matter, but they still mention them because they're creative and want to be helpful. So make sure to build the thing that, while listening to them, think would actually solve their needs. Retention is usually the hardest part in any business. Acquisition is, unless you're in enterprise sales, is kind of easy, but keeping people over time is very hard. And part of this is also turning them into paying customers, right? It's really easy to get someone on a free trial. It's much harder to actually sell to them. That's why the ultimate form of validation is payment. Third one to last, we're almost done here, is it's desirable. As a matter of fact, it's desirable to fail. Don't be shy about it. I believe me, I've gone through the pain so many times that I hate it too, especially if it's kind of public, but you get better. You get better as you get more reps under the belt here. Second to last, marketing and sales is not going to fix product market fit. Product market fit is different. Sales and marketing can help you find out that you don't have product market fit. It's not going to fix it for you. So if you see that your sales and marketing team is struggling to sell deals, it's on you to figure out why it's not working. I mean, either it could be performance of the team, which is subpar, and the training of the team, but it could also be that you're not in the right market or don't have the product that would sell in it. And then ultimately, many of the things that I mentioned throughout this document would be solved if more people were to build products for themselves that would solve very specific needs that they're having. Because at internet scale, there are many use, including people like me. That's why I'm taking these videos. All right, that's it from my side. I hope you enjoyed this. We're just shy of 30 minutes here, so I'll try to wrap this up before 30 minutes. If you like the video, please leave a thumbs up. If you have questions, drop them below. I'll get back to you as fast as possible, promised. And if you enjoy the content that we're publishing and want to be in the loop when I release my new stuff, which I'm working on, there is some exciting stuff in the pipeline that should be valuable for you as you build your business and grow and accelerate revenue, make sure to subscribe. It would mean the world to me. That's really the only ask that I have from you here. All right, so hope you found this useful and talk to you soon. Bye-bye.